Well, hello, everybody, and welcome to Good for Bitcoin, your weekly pulse on Bitcoin innovation. We are live, and it's been a busy week. Happy Friday, Kate.
Happy Friday, Brandon. How you doing?
Doing good. It's been a busy week. I feel like the week did not go by quite as quickly as last week. I don't know if that's the same for you, but felt like we
Yeah,
slowed down a little bit.
I agree. I do feel like that. What I'm noticing about my weeks is I'm having a lot of fun, using all the new tools that are coming out and using Claude specifically, but it is getting scarier, and we have some stories to go over this week that highlight just that. So I'm just trying to take as much advantage of it as I can, learn as much as I can, maybe develop some new skills that, I don't know, keep my work relevant and just keep having fun, I guess. I think that's basically the only way to approach it.
Yeah, definitely. Yeah, we'll get into that. Yeah, definitely important to just stay up to date on all the AI stuff that's happening in the world. Don't get left behind, I guess is the main thing there. But yeah, we got a lot of news to cover this week. A lot of pretty big things happened that we need to talk about. Of course, the title of the show, Are Ordinals Dead? Got to get into the Magic Eden stuff, but we have stuff to talk about with Block. We got stuff to talk about with Jane Street, with Kalshi, all sorts of stuff. So before we get into the news, of course, we got to go through all of the Bitcoin Treasury accumulation that's happened over the past week, starting, of course, with Strategy. They bought 592 BTC, a modest 592. They now hold 717,700.
Crazy. And I think also in this month marked their 100th Bitcoin purchase. I read that, which was pretty cool.
It's pretty
And then we
cool.
have Block. They revealed a 103 Bitcoin purchase, but I think that was technically from 2025. It wasn't a recent
I think it
purchase.
was like a quarterly kind of update.
Yeah,
Yeah.
exactly. But they now hold 8,883 Bitcoin. Like you said, we have some more to cover on Block later, but we'll get through these Pubco purchases.
Yeah, we had ProCap Financial, which is Pomp's company. They added 7 BTC to their balance sheet since December, so they now hold 5,007 Bitcoin. I noticed Pomp tweeted this out the other day. They've also been doing a lot of stock buybacks in an attempt to close their discount to NAV. So the value of their company is a lot lower than the value of the Bitcoin that they're holding. So they're trying to do like stock buybacks to bring that back up to, a 1-to-1 at least ratio, which is interesting. So that's Pomp's company.
Then we have DDC Enterprise. They bought 50 Bitcoin this week and they now hold 2,118 Bitcoin.
DDC Enterprise is the Asian grocery store
Ah,
or
okay. I
like
was
the
wondering who it
Asian
was.
food company. Yeah, so they're buying, so that's cool.
Love
All
it.
right, we've teased it too much. We need to cover this off the top, which is
Yep.
Block's layoffs. So Jack Dorsey, who is Block's CEO, obviously he also founded Twitter and a bunch of other companies as well. Block owns Square, Cash App, BitKey, a lot of Bitcoin and financial services companies. Basically, Jack came out this week saying that they are laying off nearly half of their 10,000 staff, which is huge. I think I saw somebody mention that it's the largest, percentage-wise, the largest layoff that a public company like has ever done. I don't know if that's like how true that is, but that sounds like it would be true. So there was a couple paragraphs that I wanted to just read from Jack's kind of longer tweet. I'll share it on the screen here for those that are watching the stream. But just to share, so a couple paragraphs. So it says, "We're not making this decision because we're in trouble. Our business is strong. Gross profit continues to grow. We continue to serve more and more customers, and profitability is improving. But something has changed. We're already seeing that the intelligence tools we're creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company, and that's accelerating rapidly. I had two options: cut gradually over months or years as this shift plays out, or be honest about where we are and act on it now. I chose the latter. Repeated rounds of cuts are destructive to morale, to focus, and to the trust that customers and shareholders place in our ability to lead. I'd rather take a hard, clear action now and build from a position we believe in than manage a slow reduction of people towards the same outcome. Smaller company also gives us a space to grow our business the right way on our own terms instead of constantly reacting to market pressures." So yeah, a lot of people were, reading into it. He didn't like specifically say AI. He said intelligence tools, but that pretty much means like AI. So that's the FUD, right? Is AI is coming for our jobs, and that's a little scary, but I think maybe this isn't like a great comparison, but I think like people always talk about like DocuSign as like DocuSign also employs like thousands and thousands of people. And people are like, DocuSign, you're just like signing PDFs. Like, why do you need thousands and thousands of employees for that? So there's certainly, an argument to be made. Like, is this fully an AI thing, or is it just like they just did get too bloated and needed to do some layoffs and wanted to, be pretty quick about it? But still, that's a lot of people that are impacted. The one good thing is he mentioned, so those that are going to be laid off, that are affected, they're receiving their salary for 20 plus 1 week per year of tenure, plus equity vested through the end of May, plus 6 months of healthcare, plus corporate devices, plus another $5,000 to put towards whatever you need to help you in this transition. So very good severance package that at least everybody is getting there. But yeah, hopefully they will be able to find jobs and find success in this new AI paradigm that we have.
I know. That was my first reaction when I saw this post was, wow, that's a lot of people employed at Block. I didn't realize it was that big. But they do also have like multiple companies under Block, right? They have Cash App and they have the mining one, a lot. So it's probably a little bit of both. I'm sure a lot of it is driven by AI. But yeah, I mean, he makes note that he thinks a lot of people or a lot of companies will also follow suit this year. Bold move to make, but I'm sure a lot of other companies will be experiencing the same future. And I think he did it right by like his severance packages. I think those were, well done. Yeah.
Yeah. Yeah, it'll be interesting. It doesn't really say like in his memo, but I think it'll also be interesting to see like the makeup of, are they laying off more employees at, Square than they are at Cash App, or like, what's kind of the breakdown of the layoffs, or is it just like kind of evenly, spread out across the board?
Yeah.
That'd be interesting to see as well.
Yeah, we'll have to see how that plays out. But all right, let's get into the next one around Ledn.
Yes. So Ledn, I saw this announcement from them. They issued the first ever investment grade rated ABS in the digital asset industry. And I promise that we will break down what the heck that means. That's a lot of jargon. But just to kind of read a couple sentences from their press release, they have issued the first investment grade rated Bitcoin backed ABS in the digital asset industry. The senior notes under the offering were rated BBB minus by the S&P. Plus, the ABS has been 2x oversubscribed, with institutional demand exceeding the $188 million offering size. So obviously, we all need an explain like I'm five based on that. So this is from Grok. I had Grok synthesize this for me. So basically, Ledn bundles thousands of people's Bitcoin collateralized loans into one big $188 million package. And then they've now turned that package into tradable bonds, which are called an ABS, an asset-backed security, that big institutional investors can then buy. So normally Wall Street ignores crypto lending because Bitcoin's price is too volatile and risky. And, there's no like safe stamp from any big rating agencies like S&P. So this time the S&P has basically reviewed Ledn's loans, their history, their risk controls, and how they handle crashes, like if Bitcoin, price goes down, like volatility. And they gave it the top/safest portion of the bonds in a BBB minus rating, which basically is investment grade, is what that kind of equals in their definition, meaning that it's safe enough for conservative funds like pensions and banks to legally buy it without looking too reckless. So it's a bit like an official reputational score.
Yeah.
And so it's kind of been given a bit of a sign off by the S&P. And this is the first time a major agency like the S&P has given an investment grade rating to any digital asset or crypto lending portfolio. So pretty cool for Ledn to kind of be the first ones. They, I think, still are operating in Canada. They're like a Canadian lending. They were in the US for a bit, and then they had to back out of the US due to all the crackdowns several years ago. But yeah, they're one of the CeFi lenders that stuck around and continued to, stay alive, I guess, after the FTX collapse, because they were seemingly doing the right things. So pretty cool that they've stuck around and continue to kind of thrive in this market.
Yeah, very cool. And you and I have talked about this before, a lot of funds and institutions that, wanted to buy into crypto lending products but they just they literally couldn't now have this opportunity. And like you said, it was 2 times overscribed. Like there's clearly a demand there. So yeah, pretty cool. It's a very complicated sort of traditional finance speak, but it's basically
it's
just
not something that we would buy, but it's
exactly.
if you're an institution, this could be something that you would be interested in.
Yeah, pretty cool. Traditional finance keeps in.
That's right. Yeah.
Yeah.
This one is pretty crazy this week. I don't know how closely you were following the timeline. Has Jane Street been suppressing Bitcoin's price is the question. Just give a little bit of a timeline for this week. So on Monday, Jane Street, which is a major trading desk, they're not a hedge fund, so they do a lot of trading and market making and stuff like that in both the digital asset space, but also just in equities in general, like stocks and stuff. So Jane Street was sued by the administrator of Terraform Labs, who is the company that was, Do Kwon's company that launched Terra Luna. They're in bankruptcy, so there's an administrator that's going through and trying to reclaim assets to the bankruptcy holders, or whatever the right term is. Basically, Jane Street was sued by the administrator of Terraform Labs, alleging insider trading and market manipulation that contributed directly to Terra's collapse in 2022. The main allegation that they make is that on May 7th, 2022, Terraform Labs withdrew $150 million in UST, or 150 million UST, not necessarily $150 million, because it was already collapsing at that time, from one of the pools that was being operated by Curve. And then minutes later, a wallet that was allegedly linked to Jane Street dumped around 85 million UST from the same pool, which helped to break that peg and contributed to the $40 billion market wipeout. Jane Street has called these claims desperate and baseless and a transparent attempt to extract money from the bankruptcy estate. And I'm kind of inclined to agree. I feel like even, everyone was taking their money out of these places, right? Because there was an active deleveraging that was happening. Everyone was trying to get out. And at the end of the day, Do Kwon is in prison right now for fraud, right? There was fraudulent activity that was happening there. So I'm less, inclined to think that Terraform Labs was the victim here. But anyway, with this news, there's been a surge of crypto communities claiming that Jane Street has been systematically suppressing Bitcoin prices since at least later in 2024 through alleged algorithmic dumping and selling pressure, which always happens around 10 a.m. Eastern time when the U.S. market opens. And that usually triggers liquidations of long positions, allowing cheaper reaccumulation. And that activity is also tied to Jane Street's role as an authorized participant in spot Bitcoin ETFs like BlackRock's IBIT, and where they handle creation and redemption arbitrage. So the curious thing is, after the lawsuit went public on Monday, many claim that the pattern kind of magically stopped. And on Tuesday and Wednesday and Thursday, instead of Bitcoin's price going down at 10 a.m., it actually started to go up at 10 a.m., coinciding with, some sharp Bitcoin rallies, short liquidations, and broader market green candles happening over the following few days. And Bitcoin certainly is up a little bit this week. It has gone down over the past day and a half. So I think, maybe that theory doesn't have a lot of legs to it, but interesting thought at least.
I was going to say,
I've been talking for a while.
You did get on the facts. It's pretty funny that 10 a.m. it happens, but basically people are saying if this pattern was real, other firms would also be exploiting it. Maybe they're just good firms, but I don't know. It could be a true conspiracy theory. I think some of the comments that I've seen is really around like whether this was manipulation or not. It's kind of like a bigger problem that like, you know, there's a handful of these trading firms that seem to have more influence over Bitcoin's daily price action than any miner, any node operator, anything like that. And that's pretty much exactly what we're trying to get away from with Bitcoin, is to not have it so controlled or centralized by, you know, a handful of firms. So I don't know. This will be an interesting one to follow, but there's definitely something sus going on.
Yeah, I think like, yeah, there was like news, a lot of news places like Fortune labeled it a conspiracy theory, kind of basically saying that like traders are just frustrated and they're looking for somebody to blame.
Yeah.
And, you know, they're looking at Jane Street as like the, you know, they're the big players and they just want to blame, you know, the big guys for their, you know, losses, I guess. But
Yeah.
to add to the conspiracy theory, there was also this one I saw kind of flew under the radar this week, but I was trying to connect two and two together. On Wednesday, GBTC, which is Grayscale's Bitcoin ETF, saw a record $102 million in inflows, which Grayscale has not had inflows like that since they converted it to an ETF. They've kind of just been like bleeding this whole time because their fees are so high. Everybody's just kind of cycling back, you know, into the cheaper ETFs. So to have that large amount of inflows, I don't know if it's correlated or not. It's probably not correlated at all, but yeah, super interesting data point at least. That's right. We're monitoring the situation. That's the meme these days. So we will continue to monitor the situation, I guess, and see if you know, the price continues to climb at 10 a.m. every day.
Yeah. All right. This next one, we have Mr. Beast back on the show.
You always do the Mr. Beast stories.
I know. They always fall to me. So this one is called Kalshi finds former gubernatorial candidate Mr. Beast employee on prediction wagers. So a Mr. Beast editor, his name was Artem Kaptur, was using insider knowledge from his job, like knowing video outcomes before they went public, to place bets on Kalshi's prediction markets that were related to Mr. Beast content. So he had a near perfect trading success on markets with low odds, which is basically a huge red flag that screams insider trading. And Kalshi's surveillance team caught him. They fined him $15,000 and they made him return, I think, around $5,400 in profits and banned him for 2 years. So yeah. And then in a separate case, a California gubernatorial candidate bet $200 on himself winning. He got a 5-year ban and a $2,000 fine, which is pretty funny. So both cases were reported to the CTFC, and Kalshi is donating the fines to a derivatives education nonprofit, which I think is so funny. Love it.
Yeah,
and
love to see that.
It's one of the first sort of real enforcement actions in the prediction market industry. And Kalshi says they've opened 200 insider trading investigations in the past year alone.
Yeah, I think this is super interesting. I don't think that there's been, you know, this is like Kalshi enforcing this. This isn't, you know, they're still, you know, referring these things to the CFTC, but I don't think there's a ton of clarity on, well, people say that there isn't like a ton of clarity on, you know, how insider trading works with something like prediction markets. I think it's like fairly like cut and dry in terms of like, this clearly is, you have insider information and you're trading against it and you're making money and you're profiting off of it. And that's what insider trading kind of is. So it makes sense that it would be, you know, illegal to do it, but I don't think there's been like an official like case of this yet that's like gone through the courts and like, you know, had an official ruling to really definitively say one way or the other on whether it's like illegal or not. So just another kind of thing that, you know, these prediction markets have, you know, prompted, which is like, we need more market clarity on this type of stuff. But Kalshi at least is cracking down. I wonder, I don't know if like, I mean, Kalshi is like definitely more, I think, close to the US in terms of regulation. So I wonder what Polymarket is doing with this type of stuff, or how much they're cracking down on it in comparison.
Yeah, I've really never heard much from Polymarket around sort of the insider trading allegations. I'm sure there's so many, like even 200 seems low, but you know, maybe that's like 200 that they have like legitimate evidence for. I'm not sure, but
yeah, that's a good point. Yeah, out of like all the volume, that still isn't that many.
Yeah, exactly.
All right. Next up, we got to give congratulations to Zest Protocol. They launched a Zest V2 this week. So lots of big things coming out in V2. basically to recap, to sum it up very quickly, in V1, all borrowing pairs had the same parameters like LTV. So whether you were, supplying Bitcoin to, take out a loan in like USDC, or whether you were supplying, I don't know why I'm blanking on like any tokens right now, but basically like no matter what you were supplying or borrowing, you were kind of locked into the same parameters in terms of like a specific LTV.
Mm-hmm.
With V2, now there are different per asset parameters based on different risk profiles, because it might be a little riskier to borrow a stablecoin against BTC against STX than it is to buy against BTC, for example. So that's good. They also have taken some notes from Granite's playbook, which you love to see, which is the option for no rehypothecation. We love that. And then also partial liquidations before full liquidations. So they're doing kind of some soft liquidation mechanisms as well. So very cool. Definitely welcome. Zest is the market leader in Bitcoin lending. So very cool to see them roll these features out. And it just makes it better, makes it safer for everybody to use. And yeah, we'd love to see it.
Awesome. Yeah, congrats to the Zest team. I think, so like you said, they launched earlier this week, and within 48 hours, they hit 41 million in TVL. So that's a pretty significant milestone for them. And it seemed like their borrowing markets were heating up quite a bit.
Yeah.
So love it.
Yep. This one I thought was pretty cool this week. So a Bitcoin solo miner, this happens like a lot where, solo miners mine Bitcoin, but this one was kind of special. So a Bitcoin solo miner has discovered a block and gets a 3.125 BTC Coinbase reward using just $75 of capital. So this was tweeted out from Brains, which is a mining pool. They have a few different services that they offer. You can just do direct, like a mining pool, like standard, where you just earn a share. But you can also lease a solo miner. Basically, how this works is you use their like sort of on-demand hash rate. This person spent $75 to purchase 1 petahash of mining power, and they essentially hit the lottery, and they mined block 92. And they earned that entire Coinbase reward minus a 0.5% fee. So I think, hitting the lottery is the best way to put it. Like just for $75 of hash power, they mined a block. So congrats to whoever that person is. That's pretty amazing.
That's so cool. Yeah, it goes from like spend tens of thousands of dollars on hardware, or just buy the Bitcoin lottery ticket and hope.
That's right. Yeah.
That's pretty cool. Love that. Okay, fill me in on this Magic Eden story. I honestly didn't see this one, so I'd love to know more about it.
This is a scoop from Blockspace. I think the article itself was actually written by Charlie. Shout out to Charlie. It's been on the show before. It's big news. So Magic Eden is shuttering their Bitcoin and EVM marketplaces.
Wow.
And it's also sunsetting their multi-chain wallet that they offer. So Magic Eden basically is going to be going back to Solana only as its main focus. They plan to sunset their Bitcoin and Ethereum marketplaces and discontinue support for their multi-chain wallet. Sources said, so this is kind of alleged, they haven't officially announced it yet, but it's rumored that they're going to be announcing it as early as today, I think, or at least over the next week or two. But sources said that Magic Eden is going to put the wallet into export only mode in mid-March before fully discontinuing the wallet in early April. And, if you've been in the kind of Bitcoin Ordinals ecosystem for a while, I mean, Magic Eden has just been a dominant force in the Bitcoin ecosystem. They were a little late, I think, to launch support for Ordinals, but as soon as they did, they, within a week of launching, captured over half of all Ordinals trading volume. Magic Eden certainly was like where the liquidity was when it came to Ordinals trading. And then, when Runes launched, they also announced Runes support, and they were kind of one of the main places to trade Runes as well. At its peak, Magic Eden commanded roughly 80% of all Bitcoin Ordinals and Runes trading volume. and Bitcoin native assets accounted for 70% of its total marketplace activity. So they really captured the market with Bitcoin ordinals and with runes. But we titled the show, are ordinals dead? I don't think ordinals are dead, but like pretty much everything in crypto right now, we're in kind of this quiet period. Everything's kind of bleeding out. Ordinals, there hasn't been like an exciting ordinals drop, I think, in quite some time. Same with runes.
Yeah.
So everyone's just kind of waiting in waiting mode, and just like Block, we're starting to see some different companies doing different restructurings and kind of doubling down on the most important parts of their platform. The Magic Eden has been, I guess, publicly pivoting away from its NFT marketplace towards what their CEO Jack Liu has called, quote, crypto entertainment, such as prediction markets. So they're just doubling down on Solana. They're going to maybe do more and like prediction markets on Solana, but they're dropping Bitcoin and Ethereum from their marketplaces. So end of an era, but I think it's ultimately a good thing. I think it was like, it was kind of like you were forced to use Magic Eden, for a while, because like they were the dominant player and there was so much liquidity there. And like, if you wanted to trade, you just kind of had to use Magic Eden because that's where the liquidity was. So I'm looking forward to this in terms of, just breaking it up a little bit and having more options to trade on. And so, it's great for, folks in our ecosystem, like, Bitflow. You can trade runes like Dog on Bitflow. Gamma obviously has been doing NFTs for a very long time, and they do both Stacks NFTs and Ordinals. So definitely very excited to see, what comes of this. But Magic Eden will no longer be, I guess, competition for them, which is good news, I guess, for them.
What are some of the other like competitors, maybe smaller competitors, where you can still trade ordinals? And also, because I know you had the Taproots Wizard, like you won that last year. How is that community going?
I mean, it's a good question. Well, like the Taproot Wizards are posting a lot about AI stuff. They've been doing like some experimentation with like Roblox. I don't know. I haven't been like following too closely on like if they've launched anything there yet, but like Udi certainly has been posting a lot about that. So I think they're kind of in a similar boat where like everyone kind of just realizes that the market is down. There's not a lot of reason to, dump a bunch of like marketing dollars, into the market right now, just because like there's no users, because that's just how the market is. So I think everybody's just kind of in like wait and see mode. That's with like all the blue chip projects out there. I feel like, the Pizza Ninjas, Taproot Wizards, they're all kind of just chilling, from what it seems like, which makes sense. That's just where the market is. But Taproot Wizards especially, like they raised enough money. I think that they'll be okay, and they'll be able to come back swinging once once the market wakes up again. But yeah, in terms of like where is the best venue to trade ordinals, like that's kind of a good question. I don't really know. I mean, I already mentioned Gamma, as an option, but Gamma was also like a little bit more focused on like curation, rather than like really focusing like very, very heavily on like trading volume and all that stuff. But I don't know. I guess we'll see. We'll see who becomes the new leader now. Don't know.
Well, best of luck to Magic Eden. It'll be cool to see what they can do in Solana. It maybe kind of makes a lot of sense for them to pivot more towards there. I don't know. Maybe they'll be back if ordinals revive again. But pretty cool.
Yep.
All right. Well, we have some quick headlines to finish off the show. So I'll kick it off first with Crypto.com. They received approval from the US OCC to become a national trust bank, which is huge for, crypto native companies that obviously want to attract institutional money, and like likely integrate deeper with the traditional finance system. So Crypto.com becoming a bank.
I don't think I would trust them. Sorry.
I know. They are kind of like a company that's just been around for so long that like they just I don't know how, but
I don't know what it is about them. I just don't trust them. Like it's just I don't know. It's just a personal thing, but like they're in that class of like the FTXs, you know.
Yeah, I agree with you.
They came around in the same time, and like whenever I think of crypto.com, I think of that era of crypto when everything you know got
I agree.
liquidated.
I mean,
and I don't know. It's
also
weird.
like they spent a lot of their advertising money in the same way that FTX did, just like going big and blowing it on like, I don't know, partnerships or like integrations.
Arena is still in LA.
That's like doesn't always like align with, you know, Bitcoin or like the industry. And I also feel like their cards were maybe not always like the highest integrity. I'm not really sure. I've never used them, but I just remember like hearing from people that it wasn't always cracked up to what they thought it would be.
Yeah, the vibes are off, I guess.
Vibes are off. I agree with you.
All right, next up is the Federal Reserve Board is now soliciting comments to codify the removal of reputational risk from its rulebook. We've talked a lot about that last year on the show about, you know, them getting rid of a lot of stuff related to like Operation Choke Point 2.0. But these were more like kind of guidelines and guidance, but not necessarily like codified in their rule book. So they're now soliciting comments to actually remove reputational risk from that rule book, which is a great development.
Nice. This next one, and I just want to make sure that this was a typo, but you said Coinbase rolls out 24.
It's 20. It is 24/5.
Oh, it's 24/5.
5 days a week. So yeah, not on weekends, I guess.
Oh wow. Okay, so 24/5 stock trading on its platform. So Monday to Friday.
Yeah, so you know, you can log in at 1 a.m. and you can buy, you know, strategy on Coinbase, but as long as it's not on Saturday or Sunday.
Okay.
Speaking of strategy, Strategy's STRC is coming to Europe. I think it's launching on Tuesday from the reports that I saw via 21 Shares. The title is STRC-NA, which I think is like North America probably is what that stands for. But yeah, STRC is launching in Europe. So congrats to the Europeans, I guess. They can earn, 11% on their, dividends as well.
Nice. And then we have the Morgan Stanley head of digital asset strategy, Amy Oldenburg, confirms that their bank has plans to offer Bitcoin trading, lending, yield, and custody in the future, which would make them the first major bank to offer these services. And it seems like they're building a native custody, so it's not through a partner. So it would be, dealing directly with Morgan Stanley only.
Pretty big move.
Yeah,
it'll be interesting to see like how far away that is, but seems like they're working on it. So that's pretty neat. Last one is Meta is planning a stablecoin comeback in the second half of this year. They have apparently sent out a request for product to third-party firms to help administer stablecoin based payments. So Meta, getting back in the game. I don't think they're relaunching Libra specifically, but they're at least trying to get back into crypto.
The only thing I can think of with Meta is when do you remember, I don't even remember what the project was called, but Zuckerberg released like when we're on meetings and we have like our digital characters and they're going to be talking to each other. Do you remember what I'm talking about?
Was that like with the Oculus things?
I think it was Oculus.
Yeah.
And it was just like the graphics were so horrible. It was like...
Yeah, it was like the people with no legs, right? They're just like bodies floating in the air and
so bad. Anyway, maybe...
Yeah, the metaverse maybe that would be fun. Never became a thing, really.
The metaverse.
Now it's the AI verse. That's what
Scary
we're in now.
time.
Well, I think that wraps it up for the week. But yeah, lots of news. Lots of news this week. So yeah, thank you everybody for listening. Please go give us a rating on Spotify or Apple Podcasts or wherever you listen to the show. We stream live as well every Friday at 2 p.m. Eastern. You can go to goodforbitcoin.com to find all the links to your favorite podcast app there. And have a great weekend. We will see you next week.
Awesome. Thanks, guys.